Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial world of Mueller Industries, and trust me, it's not as boring as it sounds. We're going to uncover some in price but also making money. This company might be flying under your radar, but their performance is definitely worth talking about. Did they exceed their own earnings goal by double? Were there some clever business moves, and has their stock performed well for investors? We're about to find out. This document is called a Schedule 14A, also known as a proxy statement. Think of it as a report card and voting guide all rolled into one, especially for the company's shareholders. It's where the company asks for your vote on important matters like who gets to be on the board of directors or whether you like their executive pay. It's like choosing your representatives in government, but for a company. Let's get straight into the numbers. In 2024, Mueller Industries brought in almost $3.8 billion in net sales. That's a pretty big number. But what's more impressive is that their operating income, which is basically how much profit they made from their core business, was over $770 million. To put that in perspective, that's like making $2 in profit for every $10 in sales. It's quite a big return. If we jump down to the bottom line, we can see that their net income, the profit after all expenses, was over $604 million. That translated to diluted earnings per share of $5 the company is on a per share basis, which is what investors care about at 31 cents. Earnings per share is an important number because it shows how profitable the company is on a per share basis, which is what investors care about. Now let's talk about cash. Cash is king, as they say, and Mueller Industries seems to be doing well in that department too. Their cash flow from operations, the money they generated from their normal day-to-day business activities, was almost $646 million. After investing in things like new equipment, their free cash flow, the cash they have available to spend on things like dividends or acquisitions, was over $565 million. To summarize, the company has more cash than it spent. To put it all into perspective, they ended the year with over $1 billion in cash. This solid cash position gives them a lot of flexibility to make smart moves in the future. Scroll from Chairman's Row. Let's hear from the chairman, Greg Christopher, about the company's recent performance and future plans. He mentions that the company exceeded its strategic plan goal of doubling their earnings by a large margin. He credits the team's execution and commitment to their core operating principles. He highlights their focus on improving gross margin, which is the difference between revenue and the cost of goods sold. This means they're not just selling more, but they're also making more money on each sale, which is critical. Acquisitions were also key. In the climate segment, they grew earnings by a large margin. He credits the team's execution and commitment to their core operating principles. He highlights their focus on improving gross margin, which is the difference between revenue and the cost of goods sold. This means they're not just selling more, but they're also making more money on each sale, which is critical. Acquisitions were also key. In the climate segment, they grew earnings by a large margin. He credits the team's execution and commitment to their core operating principles. He highlights their focus on improving gross margin, which is the difference between revenue and scroll. Despite the conditions, we continued to expand. Poor business growth, even with challenges like COVID-19 and slower building construction, Mueller Industries continued to expand. They made two important acquisitions in 2024. The first, Nearing Electrical Works, is their largest acquisition to date, and it gives them a platform for growth in the energy transmission and electrification markets. The second acquisition, Elkhart Products Corporation, EPC, will help them integrate their copper fittings manufacturing and relocate some of their global joining systems production to the US. In summary, they're expanding their business even in a tough market, and they are making more money than ever. Looking ahead to 2025, they're kicking off a new strategic plan with ambitious goals. They expect business conditions to improve, especially in the US. They also have a strong balance sheet to support reinvestments and acquisitions. They also plan on pursuing new growth sectors. This shows they are confident and are expecting a good year ahead. Now let's look at the things that shareholders will be voting on at the annual meeting. The first thing to vote on is electing 8 directors to the company's board. Think of the board as the supervisors of the company's CEO. The second thing to vote on is the appointment of Ernst & Young as the company's independent auditor. It's like hiring an independent accountant to make sure the company's numbers are accurate. The third thing is an advisory vote on the compensation of the company's executives. This vote is not binding, but it gives shareholders a chance to voice their opinion on how much the company's top people are being paid. How does the company choose who gets to be on the board? The Nominating and Governance Committee considers things like integrity, skills, business experience, and the ability to devote time to the company's affairs. They Also consider diversity. The company is committed to maintaining a highly qualified and diverse board, and as such, all candidates are considered regardless of their age, gender, race, color of skin, ethnic origin, political affiliation, religious preference, sexual orientation, country of origin, disability, or any other category. Mueller Industries has a commitment to sound governance practices. Some key things include having a board with many independent directors, having an active board that evaluates itself annually, having 3 committees that focus on key areas like auditing and compensation, and having a lead independent director who acts as a bridge between the CEO and other directors. It also enforces open communication, has stock ownership requirements, and is managing the company's ESG. The board plays a key role in overseeing risk management. This includes identifying and understanding the risks that the company faces, setting the company's risk appetite and tolerance, making sure that management has effective risk management processes in place, and regularly monitoring the company's risk profile. A key example would be the audit committee, which reviews the financial side of the risk for the company. How are the directors paid? Non-employee directors receive a mix of cash and stock. They get an annual fee, meeting fees, and an annual equity award. Some directors also receive additional fees for serving as committee chairs or as the lead independent director. The intention is to align the interests of the board with the company and the shareholders. Shareholders are being asked to approve the reappointment of Ernst & Young as the company's independent auditor for the year. The audit committee is responsible for overseeing the company's financial reporting process. They review the financial statements with management and the independent auditors, and they discuss the auditor's independence and objectivity. This ensures the company's financial statements are fair and transparent. Let's look at how the company pays its top executives. The goal of their executive compensation program is to align the executives' interests with those of the shareholders and motivate them to achieve the company's strategic and financial goals. The company uses a combination of base salary, annual incentive compensation, and long-term equity incentive compensation. A big part of their pay is tied to the financial performance of the company. They use varying performance metrics under their short-term and long-term incentive plans, and their annual incentive program is based on earnings performance and capped for maximum payouts. The equity awards include extended vesting schedules and performance-based criteria, and they have a recovery policy applicable to all senior employees. On the other hand, they do not provide for single trigger severance upon a change in control, and they do not permit gross-up payments to cover excise taxes, the pledging or hedging of their common stock, supplemental executive retirement plans or compensation programs, or policies that reward material or excessive risk-taking. They maintain what seems to be a balanced approach to paying the people that lead the business. As a result of 2024 performance, the annual incentive payments for the NEOs were calculated. This is a key thing to consider when evaluating whether or not the company does pay for performance. Here's the big picture. A portion of our NEOs' compensation is tied to performance. The company sets ambitious targets, and if the company does well, the executives do well. Equity grants also follow this approach. The more shares the top dogs acquire, the better it is for you. Scroll throw versus taken sync to this is one of the most important sections. To summarize this very quickly, the table shows the pay of the CEO, the average pay of the other top executives, and the company's performance over the past 5 years. It also shows how the company's stock performed compared to other companies in the same industry. Looking at the last year, 2024, the summary compensation of the CEO was almost $23 million. The average summary compensation of the CEO was almost $23 million. The average summary compensation of the non-CEO was almost $4.4 million, and the shareholder return was $17.2. Here are some quick facts to finish up. The stock is traded on the New York Stock Exchange under the ticker symbol MLI. Finally, the board of directors, it consists of Gregory Christopher, Terry Hermanson, Elizabeth Donovan, William Drummond, Gary Gladstein, Scott Goldman, John Hansen, and Charles Herzog. Scroll so what do we think of Mueller Industries after this deep dive? It seems to be a solid company with a strong financial performance. They have a clear strategy for growth and a management team that is aligned with the interests of shareholders. However, like any company, there are risks to consider, such as economic downturns or disruptions in the supply chain. Overall, the company is well positioned for the future and is worth keeping an eye on. Thanks for watching. If you enjoyed this video, please like, comment, and subscribe for more corporate deep dives. Let me know which company I should decode next.